Hello, everybody. Jim Maloney here. Happy Friday. It's the Dallas Trading Floor. Boy, a strong close to the market today. Really, really nice. Especially if you're in some Dow stocks, just kind of rocking it up there, which is is a good thing. At least it is if you're in some of the Dow stocks. So the Dow was up more, believe it or more than 2.6%. That's pretty amazing when you consider that. And it seems as if we're in sort of an uptrend, which is indeed a very very good thing. So we will see if we hold into this uptrend, but at least for now, I mean, it's looking fairly good. And I think, yeah, it may be. Hopefully, we'll have a strong week next week, and I'm going to have some rundown on some sector leaders, which might be of interest to you, and see if we can find some places to sort of go move towards. It looks as if Exxon made record profits. I've been adding to Exxon all week, fortunately. So that's been working out for me, anyways. But Exxon definitely moved higher. Had absolutely record earnings. Their sales were up 42% to 104.6 billion dollars, which is boy, that's a lot of money. So that just seems to be doing. Apple did well too, which is also a great thing. So that's looking good as well. Just wanted to kind of cover everything on the chart. Let's take a look at the Exxon chart here really quick. I just put this up before coming in today. Very nice. We're up. We're right at the top of the buy zone for we're right at the top of the buy zone for Exxon right now. So that's looking good. I mean, I think you still can buy it here. I think there's going to probably be a little bit of a pullback on Monday. We will see, but just very very strong numbers coming in on Exxon, and real interesting in that we're still seeing so much strength in the oil stocks. It's just it's really amazing. I mean, that's sort of been this tale this whole year. Has been the strength in the oil sector, and definitely with this results on Exxon, that's definitely been the case. Here's the stock of the day, the IBD stock of the day, and it's not in oil, which is kind of good for a change. It's a company called Pure Storage, which is in the computer storage space. Of course, this is all solid state storage. Has a very nice shape. The symbol on this one, PSTG. It's got a 3162 buy point coming up off kind of this double bottom, and it looks pretty good. And it's in the computer data storage area, which is not necessarily the greatest of the areas. It's a 194 out of 197, but it does seem to be getting some support. It's in a consolidation, and it's coming up, so hopefully we will see it move higher. So that's the stock of the day, PSTG Pure Storage. Kind of an interesting one. Here's one that I kind of want to go over for everyone, and that is the list of the sector leaders. And I think there's some real interesting one there, and they're mostly in the oil sector. As you can see, we've got Comstock Resources, Fang, Earthstone Energy, Flex LNG, which that isn't really an oil stock. That's a natural gas stock, but pretty good there. Matador Resources, Pioneer. So I want to kind of take a quick look at some of those before we get into anything else, and let's see if I can make this a little smaller so everybody can see it on TikTok here. There we go. I'm trying to make it even a little smaller. Hopefully we can do that. If it'll let us do that. I don't know if it will. Hopefully it will. Okay. So there we go. This is cross country healthcare. It's on the list, but let's go to the overall list here for the sector leaders, and this is an interesting screen. I think it's definitely worth looking at if we're looking at, okay, well, it's not letting me, okay, kind of jumping all over the place here. There we go. There we go. Okay, so first one on the list is Comstock Resources. And I want to put this one up there. This one is a possibly actionable on Monday. Comstock Resources. Let's see if I can get that up. Boy, there we go. Okay. Comstock Resources, CMK. Big problems getting it to come up onto the screen here. Let's see if it's a little bit of a lag on my connection. I wish it were faster. We always wish it was faster, don't we? So pulling up Comstock Resources here, CMK. There we go. All right, Comstock Resources finally got it up. It's been sort of in this downward trend. You know, the high point here, 21.85. Currently, it's at $18, and it's starting, I think, to make its move. This one is a 98 relative strength, which means it's in the top 2% of all the stocks out there. We've got a pretty good checklist, 78 on this one. CMK. This is one of the sector leaders. So definitely one that possibly could be on your action list for Monday. I definitely think we're going to continue to have strength in, I think we're going to have continued strength in this sector. This is, of course, oil and gas and exploration. Second one on the sector leaders, this is Diamondback Energy. Symbol on this one is FANG, easy to remember. This one also is coming up to a buy point. 182.24 is the buy point. Currently, it's 153.83. That's the price on this. This one I like a lot because it's got a 100% checklist. See if we can zoom that over for the people watching on TikTok. This one has a 100% checklist, and it is actionable right now. It closed at 153.82, and it's up after hours. Just 1 cent, not a lot, but definitely looking pretty good here. This is a sector leader. This is definitely one that you want to put on your watch list because I do think that potentially this one has some way to go. The symbol, easy to remember on this one, FANG, is the symbol for this one, FANG. All right. Please check CPRX. We will in just a second. So let's go down and see if we can check CPRX for everybody here. That's not necessarily on the CPRX. It's not on the leaderboard. The leaderboard, but it's quite good. No, I'm sorry, it is Catalyst Pharma. Excuse me, I should be more careful. The Catalyst Pharma is definitely a sector leader, and it is looking pretty darn good. So let's take a quick gander at that one here. It's basically come, it's got a 1722 buy point. This is CPRX, by the way, everybody. Nice checklist on this one. Basically an 89% checklist. So the only thing it's really failing on is it's a little bit more than 15% off of its all-time high. But other than that, it's looking very, very strong. And it does look like this also has a relative strength of 99, which is excellent. 99, by the way, that means this is in the top 1% of all stocks. The question is it actionable? And I do believe it is. I think this is actionable right now. I think this one is actionable right now, and we definitely can. We definitely can move into this one as well. CPRX, Catalyst Pharma. It's definitely on the sector leader list. Let's see if we can take one last one off the sector leader list. And let's go back to, this is Flex LNG, also looking good. It did kind of take a dump at the end of the day. I don't know why, but it's up after hours. 31.50 is the price on that. Let me just check to see if it pulled. It's got a 100% checklist, and it looks as if on the technicals. Let's see how far off the uh, 50-day line it is. Boy, it's right there. It's right at the 22-day line. So this one also is actionable too. Not quite as strong in terms of the relative strength. This is a 93 relative strength, and of course, that's in the top 7%, but still excellent in a very, very good area in the market. Number four, it is in the oil and gas pipeline transport area, so it's looking pretty good as well. So this is one you might want to put on your list as well. Um, uh, this is one you might want to put on your list as well. Flex LNG, FLNG is the symbol on that one. So okay, let's go over to the back to the list of sector leaders here, and this will kind of give us a look see, kind of what I'm talking about with the sector leaders. These are ones that I think that coming up on for next week we want to kind of look at and see which ones. We looked at Comstock Resources. This is good. Diamondback, though, I think is the better of the two. It's a little bit more expensive, a lot more expensive. 153.82, obviously. FLNG, we did that one. Also, CCRN, which is Cross Country Healthcare. That's nicely set up if you don't want to be in the oil and gas space. That one's nicely set up as well. And Catalyst Pharma, CPRX, that's also set up well. That's a little less expensive, 14.19 a share, but definitely something that you want to look at. Some of the usual suspects are there, of course. Pioneer Natural Resources, good stock as well. I would probably take Diamondback over that, just because it's a little bit better. So, let's see what else do we have here, and I think so we talked about the stock of the day. Let's see if this is Exxon, of course, doing very, very well. Let's kind of look in and see kind of how my the stocks that I own currently are doing. Here's what I currently own. I own Exxon. I've been adding to it all week. It just had blowout earnings. I thought they would be good, but I didn't think they would be this good. Doing very, very well. Currently at 110.20. So possibly this is still in the buy zone up to about 111. So you still can buy this without being extended, but it's getting kind of late in the day in terms of buying this one. But I do think it's probably headed higher next week as well. Also, AEHR. This is a test equipment company for the semiconductor industry in the silicon carbide area. It did nice. It'd been pulling back, and now it's starting to keep. It's sort of back to where it was at the beginning of the week. EI Lilly, of course, I did take some profits on EI Lilly this week. We're going to have earnings next week, so I probably will be selling before earnings because I am not up a total of 10% on this one. I wish I was. Well, we might get up there and we might hold, but I'm probably looking to take some profits here. Some nice action on EI Lilly. AMSL, this one just has come back a little bit. This is the lithography company that is very, very important to chip manufacturing. And this one is a little bit more volatile, a little bit more high risk there. I did cut back a little bit on this one as well. The UPRO, of course, I'm in the UPRO. It's doing well. That's the 2X S&P. If you really want to look at the index, I think that's doing the best probably right now. Of course, the Dow, but I think it's really the S&P that's been the one that's shining. And of course, I'm also in the Energy Select Spider, which is kind of redundant because I own ExxonMobil. The XLE is primarily Exxon and Chevron. So those are the two that make up the most of the XLE. All right. Well, let's take a look at some questions here, and let's get to the questions. Thanks. All right. Let's take a look at AHCO. I don't know that's interesting. AHCO. That quickly. Yeah. Oh, that's okay. Adapt Health. I'm not familiar exactly with this issue, but that does not mean that it's not a great issue. There we go. All right. So here we go with Adapt Health, and let's kind of do a little bit of chart analysis here. Take a look at it. Nice. It looks like it's coming up nicely, relatively close to the 21-day line now. If you buy this long, you want to get relatively close to this 21-day line. And we're a little bit high. We're at 7.35% above that 21-day line. So we're a little bit extended. I know that's hard to believe, but we are. Definitely good relative strength here at 93. So that means it's in the top 3% of all shares out there. So looking pretty good there. And I just want to kind of go over and sort of look at the fundamentals on this. And what I mean by fundamentals are we do chart analysis, of course, but we also do fundamental analysis. And here we go with the fundamental analysis. The sales are looking pretty good. They were up 18% last quarter. And so that's good. But here's an issue that I think that might be a concern, and this is a concern. We did have a drop in sales of 25% last quarter. So that might be a little bit of a warning issue. The PE ratio is also a little bit higher than I'd like at 31. So that doesn't really bode well. Typically, what's happening in this market with high interest rates is we're seeing companies that have higher PE ratios punished a little bit. The average is about 24, so we're a little bit high on that. It's a good stock, but I think that there may be better options out there, at least for right now. Let's look at the checklist here to see kind of what's going on here. Yeah, unfortunately, I kind of suspected this. The checklist is not stellar. Again, we want to try to buy the finest merchandise that we possibly can, especially because we're coming out of this base and we are in an upward trend, at least for now. I mean, who knows how long this upward trend is going to last? But I think we might get another strong week, and so we want to kind of take the best merchandise we can. I don't think this falls in that category. I think this is definitely good, but I don't think this is great. So here's my take on this one. I would be a little bit more careful here. And really, all I have to say with this one is that I would watch list this one, but I wouldn't buy. So that's kind of my take on it. I would watch list this one, but I probably would not be a buyer here. I just wouldn't for a lot of reasons. I just don't think that this is going to be give us the best look. Let's just take one last look here. I'm going to go over to the I'm going to go over to the monthly chart. Just kind of give us a really big view of it. Yeah, this stock's been around since 2019. Went way up here, up into the 40 range, and then it's pulled back, and it seems like it's starting to make the turn. But I want to see some more strength. I want to see it closer to its all-time high before I would be interested in it. So I think you just have to watch this one. I wouldn't be a buyer here. Just that's sort of my take on it. So, but thanks for that. I do very, very much appreciate it. All right, let's take a look here at the next one. Can we look at the S&P 500 versus the inverted 10-year bonds? Usually we need the 10-year bonds to go up with the 500 confirmation yet. Interesting, Charles. Let me try to think of a proxy for those 10-year bonds. I think the 10-year bonds are T, um, the TBT would be the inverted 2x. So let's look at that. Let's kind of give a look at that. Let's go over here to the S&P 500. All right, and that's going to be the S&P 500 index. There we go. And let's take a look at that. And we're just pulling this up right now. See if I can make this work. And what I'm doing is I'm shifting over to the comparison chart right now on the screen, so hopefully you can see it. Now I've got the S&P up here. The question is, I've got the S&P up here. The question is the inverted bond. So I think that's going to be the TBT. So if we can take a look there, yeah, okay, interesting. Um, Hmm. So I'm trying to figure out what. Oh, and let's look at the TVT too. So see if I can answer that question, which I don't know if I can. Oh, okay. So this is the TBT, which the TBT. Let's see if I got the right one here. TBT is okay. So it's not. It's the 20-year. This is the inverse corresponding to twice the inverse. Okay, so this is the inverse 20-year. Unfortunately, I can't remember what the inverse 10-year is. So let's see if you could maybe give me help. Oh, here we go. Thank you very much. IPG. Thank you very much, Charles. So let's see if we can pull that up as well. That is the TPG. Oh, there we go. All right. All right. So there we go. Thank you for that, Charles. Appreciate it. It almost interestingly enough, look at how closely tracking that is. I wonder if I can get rid of make this more make this a better chart here. See if I can do that. Hold on. Okay, well, we're not doing it there. All right. So let's look at the let's see, this is TPG. Let's go TPG first. There we go. Okay, so this is the nope, I'm wrong. I am wrong. So anyways, so sorry about that. I got the wrong chart there. Sorry about that. All right. Well, let's try something else. Charts are not displayed. I am sorry about this. Let me see if I can come back and give you a better chart on this one. All right. Any spreads looking good off the tech sector? No, I haven't really seen any spreads that I've been. Let's go back here. No, I'm sorry about that. Let's see if I can give you a decent look. See, hold on. Go. Pulling up my charts again, so you have to kind of bear with me a little bit. There we go. All right. Now we got our charts back. Sorry about that. Oh goodness. Okay, let's go for the next one. AHCO is looking good in the healthcare setup. Okay. Well, I'm always interested in that. AHCO. Oh, Adapt Health. Yeah, this is a good stock. I um the chart on this one. Yeah, it's starting to look good. It looks like it's come off the 31-day line pretty well. The healthcare is starting to look better. I want to kind of look at this one. These are mostly the managed care ones, which have been doing good. One of the things I want to look at here is to see in the healthcare sector if we can find some leaders. Now, I have a fairly large position in Lilly right now. Let's look at this compared to Lilly. Okay, Lily's a little bit better. Let's look at it in terms of McKesson. This is not really managed healthcare, but yeah, this is the best of the breed. I think this one is probably, at least in the healthcare sector, is the one that possibly is the one that we wanna kind of focus in on. MCK, and this is one I've been looking to buy. I haven't bought it. It's just I haven't found a setup, but this one is in sort of in the buy zone. So this is in terms of the healthcare sector. If we see a good day on Monday, I think that this one's likely. This one's a little bit extended. Okay, it's a little bit extended, but I still like this one as opposed to the other ones a lot here. McKesson, and I definitely think you can definitely. I mean, HCO is looking good, but I think that you probably, at least for right now, I'm sticking to some of the larger issues just because this is just a tough market to trade. So for Sarah, let's look at Shockwave. Shockwave, it pulled back. I don't know why it did. This is why I do like some of the bigger cap healthcares, just because of this. Let's see if we can go there. Let's go back. There we go. There. Okay. Here's Shockwave, and nope. Sorry, all this fooling around here. There. Now we're back with Shockwave. And Shockwave pulled back, and I don't know why it pulled back so hard on Thursday, but it's come right back up to the line. The question is it viable here? And that's a very, very good question, I believe, because it does look like it's starting to reverse. This is a really revolutionary company, but it's a little bit weak. I would wait. I would put this on the watch list. It's got an 89 checklist, which is extremely strong. But I'm a little bit worried about this because of the pullback that it had here. But if we look at this, we draw this line, we're definitely seeing increasing. We're definitely seeing it increasing. So the question is, if we were to buy it here, would it pull back below the reversal line? So right now, This came up all the way up to the buy zone, pulled back. So it may be getting more power. But I'm just a little bit worried. We're very close to earnings, so I'd be careful here. I think if you're looking for the healthcare, I know this is boring, but I think that we're probably better off with McKesson. I know it's a more expensive stock, but I just it looks to me, the look on McKesson just is superior, and in terms of its size, that seems to be, at least for right now, that seems to be where the action is in the market. The large cap stocks are doing better than some of these more growthy names. This is in the buy zone. I definitely think it's going higher. And the only problem with McKesson, of course, is that its earnings are in 4 days. But I do think that we could wait and see how it comes through earnings. I have a feeling this one could pop after earnings. Um, and it has a very strong checklist, 89 for a large cap stock like this. So that's the one I think that you might want to look at in terms of healthcare. So long and short there. All right, let's take a look at for Ryan at LNG. And I definitely like LNG a lot. As you know, I've played it a bunch of times. It is a Cheniere, it's the name of the company, and it one of the issues has been in the amount of natural gas that they have in Europe. They definitely have full supplies now. At the beginning of the year, of course, they were really short. They have bulked up. They've bought just about all that they can. But I still like this company. This is a company that liquefies natural gas, and it is definitely below the buy point. The buy point is 176. We're at 174, so we're right there. And the question is, that how close to that uh, 21-day line are we? Well, we're very close. 2.47. which means that if anyone's going to buy it, and I think there's going to be like a lot of people buying it, I think that buying it this close to the 21-day line is a good place to buy it. 97 relative strength. That means this is in the top 3% of all shares. My only issue here is that earnings are in 4 days, and that is a little bit concerning me because you know this is a relatively volatile stock, and it can come through earnings and pull back. So let's kind of look back in the history to see how it's reacted to earnings. Last time it went through earnings, it was a pullback, unfortunately. The time before that, pullback. So if we look, let's look at the earnings on Cheniere. Let's look at them. Okay, there we go. We've had just massive earnings, but we tend to have overestimated the earnings here. So here's the thing with Cheniere. Look at that. Boy, look at that profitability. I'll just show it to everybody on TikTok there. Look at that profitability, just amazing. Here's the thing: the way Cheniere seems to trade is that its profits are definitely going to move up this next quarter. But the thing is, I think there's going to be a negative reaction to it. So we have earnings essentially on this one in 4 days. Here's what I would do with Cheniere. I would wait 4 days and then see how it comes to earnings and then buy it because I do think this is a great stock. I just think that the way it has reacted on earnings, it's fallen on earnings uh, at least for 2 quarters, and it looks like it may happen again. So what I would do on this one, I would wait for earnings, buy it after earnings. Now, Cheniere earnings for Cheniere are basically in 4 days on November 3rd. Okay, so November 3rd are the earnings. So we want to probably wait until November 3rd to buy this one and then see how it does in terms of earnings. But I have a feeling it's going to be good on earnings. Just don't buy it before earnings because it could pull back on you and you could end up giving up a lot of profit that way. Hi, XOM and Dino. Keep holding. These are a little bit different because they're larger. I really like both of these stocks. I'm relatively bullish on ExxonMobil even after their blowout numbers. I like Dino too, and the reason I like Dino is because they make diesel, and diesel is in shortage right now. If you can believe it, that's part of the reason that we're having a lot of these so much inflation is because the the supply, unfortunately, of diesel is short. And let's see if we can put that up here. And what I'm gonna do here is I'm gonna show both of these, compared both of these, ExxonMobil and Dyno, and see how we're doing on them. I'm gonna put up ExxonMobil there. Right. So they're both really good. I mean, Dyno's actually better in terms of, but it's of course a smaller company. I mean, obviously. Um, let's go back over here. There we go. Okay, so let's go over um, to the chart on the comparison between Dyno and ExxonMobil. Let's share that screen out. See if I can get it to share. There we go. Right. Here is the comparison between Dyno and ExxonMobil, and this is basically since July. We've had a little bit better performance with ExxonMobil as opposed to Dyno. I think you can hold them both, to be honest. I really do. I think you can. I think they're both very, very good stocks. We can definitely hold both of these through earnings. Now we've already gone through earnings on Dyno for I mean on ExxonMobil. Earnings for Dyno is on the 7th. Okay, it's on November 7th. So we can definitely be holders here. I think this is going higher. I really believe that HF Sinclair is going higher, and part of the reason I do is because, of course, they're what's happening with diesel, and they're a refiner of diesel, and that is in short supply. So I definitely like this. Now, if you were trying to make a first time buy here, this is probably not a good place to make a first time buy because it is extended out of the buy zone. The buy zone for this, the pivot on this was 56.30, and of course we know the buy zone is the pivot plus 5%, and it's above that. So right now, if you're doing a first time buy on Dino, you are extended. So I probably would not be a buyer of that extended. Now with ExxonMobil, it is at the top of the buy zone, but it is not out of the buy zone. Another advantage with buying Exxon over Dino. Now I like Dino a lot, so I'm not. It's actually outperformed Exxon. Is that ExxonMobil is in the buy zone even after its earnings, and I think that it's safer to buy that one at least for the time being. So that's kind of my that's kind of my take. That's kind of my take on that. Is that I think it just might be a little bit safer. It might be a little bit safer to buy this in this in the to buy Exxon over Dino here. So, but they're both looking really good, and you can definitely hold both of them. So, long and short of it, there it is. Hi, on Semi has earnings on Monday. On Semi has some earnings on Monday. Wolf Speed went down really bad. What do you think? Well, I think that, unfortunately, I love the semis. Believe me, I have AMSL, but I had to cut back on it. I just think that it's just the market is just volatile on it. And it's one of those things where I think that, here's the thing, and we just have to do this every time, and this is so hard. You just have to, if you're not up 10% on your holding, if you're not up 10% on any of these things before earnings, you just have to sell them because earnings is just too much of a catalyst, and it's made it so difficult. It's made it so difficult. So let's take a look at on Semi. See if I can go back here and do this. Bring up on Semi, and let's take a look at it just really quickly. ON, of course, is the symbol for on Semi. It's a little bit below its 76, 75, 73 buy point, and it definitely, if we draw the line there, let's do that and bring that up for everybody here. So basically, here's the deal with on Semi. It is definitely, it's definitely right. It's definitely right at the reversal line here. I put the reversal line here, but with earnings coming up basically just in 3 days, I think what you got to do on this one, if you're not up 7% or more, really not 10%, I would sell this one just because it may pop, but it may not. So I'm a little bit concerned about this. Let's kind of look back and see, because these can tank on earnings, and it's just you don't want to be there when that happens. Yeah, they've had really, really good growth. I mean, look at this. Sales are up 25% last quarter. I think their sales are going to be super, but let's kind of look to see how it's reacted in the past. Well, we had a nice move the last time, but we were down. So the street is expecting more. Let's look at that, down again. So here's my advice on semiconductor. I think what you got to do here is you just got to sell it before earnings to protect your position. I may be wrong on this one, but I definitely think that's definitely the case here. Well, thanks everybody. Thanks for watching the show today. I will be back on Monday, and hopefully we'll have some good stuff there for you on Monday. If you can try to, I do think that we're going to try to put together, a ready list here that's going to be available. If you go to www Dallas Trading Floor, we're going to try to put it together one for everybody out there, and it should appear on there over the weekend. But I think we're coming into a very strong week. I think we're coming into a very strong week here. So there is some good opportunity that's finally coming into the market. It's been a long time coming, and I think that we got to get ready to move into the market right now. I mean, I've been essentially myself. I've been out of the market, and now I'm starting to move in. Again, I have I have relatively big positions in Exxon and Lilly. What I'm probably going to do is I'm going to probably be a seller of Lilly because I'm not up 10% on it. So I'll probably be a seller of Lilly before earnings, and then I'm going to be looking also to deploy some capital. So what I'm going to try to put out there is a list of the ready list out there so everyone can see it. Just ask everybody a favor, of course, if you could please like the show. It helps us get out there. I'm trying to build the number of people on YouTube, and I seem to, I'm sort of at a place where I've got a lot of people, but I'm not making as much progress as I like. So if you can, please, if you like the show, please like it, but also recommend it to other people, please. That helps us get out there. And of course, if you're on TikTok, please like it as well. We also are on YouTube as well and Twitter. So we're on all those platforms. And I will be back. I will be back on Monday again at 5. Thanks everybody for taking a look at the show, and I'll be back seeing you on Monday. But remember, try to sign up on www.Dallas Trading Floor, and hopefully we're going to get out that list for everybody for the ready list, because I do think we're coming into a period in which there's going to be some. At least it's going to be an uptrend probably for another week or two, maybe even more. But we're starting to move off the bottom, so there's some opportunities to get in and ride up the escalator a little bit. I'll see you on 5 o'clock on Monday. Happy trading.